Hello and welcome to Pro Trader Strategies market commentary for Monday, March the 11th. Yes, you can tell, septic issues again. Anyway, let's get on with it. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. All we really got, it being a Monday, generally don't get anything at all, to be quite honest, so it's nice to get something here, right? So we got core retail sales coming in at 0.9%, higher than the expected 0.4%, albeit they did revise last month's number down slightly from negative 1.8% to a negative 2.1%. So that revision there kind of wiping out the core retail sales headline number there. And then we got retail sales. Core retail sales is stripping out autos and things of that nature that are variable. They come in more of a cyclical pattern anyway, so they strip those out to get a headline number. And then with retail sales, it came in at 0.2%, expected to be unchanged, and revised last month's number down from negative 1.2 to negative 1.6. So again, the revision there making the headline number not look so great. And business inventories coming in line with expectations at 0.6% and revised last month's number slightly higher, which is worse. Higher inventories is a sign of a worsening economy. That came in a little bit higher than expected by 0.1%. So on to the overall markets. One thing to note, I mentioned it. Yes, we are having septic problems again. That's why I have gotten really ready for this webinar or daily market commentary, I should say. I mean, I've gotten ready for it, but I haven't been able to get ready for the day in a sense. Anyway, let's talk about the markets. I've added a couple of things here, but with the overall markets, we've got crude oil here trying to trudge a little bit higher. Yes, remember on Friday, we had that big sell-off with the build, the economy not looking so great. Then late day rally in crude oil today, a bit of a follow through on that. We haven't really gone anywhere though, you guys, and we can't really get up into the 60s with the economy the way that we're seeing, not really firing on all cylinders at this point here in the United States or globally for that matter. So crude oil really, I don't think can get up into those 60 handle and sustain that. I'm more of a mid to lower 50s right now in crude oil. All right, gold futures after Friday's really big rally. We're getting a bit of a pullback inside day today. The equities are rallying hard after a bad opening because of Boeing. We can take a look at that here in a minute, but we've got bonds coming off, holding a little bit, again, yesterday or Friday, I should say, big rally in the bonds. Again, no real place to go. If they start going higher, that's indicating lower interest rates. I don't think the Fed is going to touch interest rates for the remainder of 2019. They're not going to increase interest rates. They're not going to lower interest rates. It's all going to be kind of a supply and demand push back and forth. Maybe some, global pushing because of the way the economy is going, but I don't really see the economy being at a point where we need to lower interest rates or do any kind of economic stimulus at this point. But VIX really coming off hard right now with the equities making a massive move higher after opening up much lower. If we look at Dow Jones Industrial Average, it was much lower on the day. We are having a rally from the beginning to this point, almost unabated. And most of this with the Dow has to do with Boeing. And if you guys have seen some of the headlines, Boeing's had a couple of airplane crashes. One of them, the 737, just recently. What's happening is Boeing added something to the controls of this 737. It's basically if the airplane starts to stall, it automatically kind of does an autopilot where the computer tells it to start dipping the nose downward. So when an airplane stalls, if you start creating momentum to the downside, which, you know, put the airplane into a nosedive. It generates energy, makes the engine kind of start back up, like what we would do with a car back in the day. If the battery died or your starter didn't work, you'd jam it into first gear, roll it, get it rolling with the clutch popped in, and then pop the clutch and it would kick the engine into starting. That's similar to what we're seeing with these airplanes, right? But Boeing did not tell the pilots what was happening. So these pilots are fighting the autopilot from diving, and it causes what what people are speculating as more of a problem, putting these pilots into panic mode, trying to fight the airplane. Yes, I guess Boeing is coming out, well, these guys can just easily disable it. But if they weren't told what to disable, they don't know what to disable, I guess. So, big problem with Boeing. It was accounting for 350 points of the downside. Here's a chart of Boeing making a big comeback off of the open because they're saying it's really not a problem other than these pilots don't know how to react to what the airplane is telling them. It's making a bit of a comeback, but the overall equities and the wet blanket we saw on the markets overnight into today has shifted. We can see here with the NASDAQ as well on the open. NASDAQ really wasn't getting beat up as bad as the Dow Jones because Boeing is in the Dow Jones and not in the NASDAQ. But, you know, as we talk about a rising tide lifts all ships, well, the same as when the tide goes out, all ships comes down, right? So that's what we were seeing with Boeing kind of pulling the broader markets down. But now starting to see this lift almost unabated to the upside, as we'll see when we see the breakdown in the E-mini S&Ps as well. But nice little bottom here, bottoming chart. People could say this was just all technical. Well, part of that is the case, but there was a major pull down from Boeing, and now it seems as it was not as big of a deal as people were thinking. It's not going to draw down the rest of the markets, and we're starting to see a nice big rally here. We can see on the overnight inventory there was some back and forth here in E-mini S&Ps, but no attempt really to flush those guys out overnight, and on the open just unabated to the upside, not even a red candle since the open. So real strong today. Confirmation, whether you want to say it's technical or whatnot. I'm playing this stuff to the upside at this point, and we'll talk about that without further ado, what trades I've done. Caterpillar being one of them. Remember, I played Deere to the downside when we got this pullback in both Deere and in Caterpillar. Deere more of a sell-off than Caterpillar probably, but now that we're starting to see this rebound, I think it's been overdone to the downside. I added some long deltas, has really low implied volatility, as you can see here, so that is a situation where we're looking to do premium buying strategies. And me being bullish, having a bullish assumption in Caterpillar, I went into the May, so it gets me out past that big theta decay, and bought the 140 calls in there for, what was it, $3.45. Now, I did Caterpillar in both my IRA and in my margin account. So my margin account, I did it at the right quantity. My IRA, I went a little bit big on it, so I'm trying to get out of a couple of those. I messed up, put the trade I was going to put in my trading account into my margin account, and it's a little bit larger than what I'd like to see in my IRA because it's a smaller account anyway. So trying to get out of a few of those, but it is in both my IRA and in my margin account. And then I also went over to Macy's. Look at this technical pattern. Look very similar to what we are seeing across the board in the equities. Confirmation here, technical totally. Got a little overextended outside the value area. I'm expecting it not to really rally super hard, but maybe get up back to the point of control and pierce that, just albeit slightly, shake out some of the shorts or whatever. But I'm playing this to the upside just on a technical move, and went into the May again, bought the 24 calls in there for $1.24 or $1.26, sorry, in both my margin account and in my IRA. And then finally, the last trade I added was in line with the retail sector. It's being XRT, which is the ETF for the retail sector. Very similar chart setup that we saw with Macy's. It wasn't quite as overextended to the downside outside the value area, but I'm expecting a little bit of a pop here with XRT as well. And went into the May, bought the 45 calls in there for $1.28. And so playing that again to the upside. That's it. That's all I've added today. Those 3 trades, all basically bullish, adding positive deltas. I think that the market's ready to make a move to the upside. So I am pretty long and have a lot of premium buying strategies going on in my account. So would like to see some volatility increase here so we can change it up a little bit and get some premium selling strategies, higher probability going on. So check it out. Go to ProTraderStrategies.com, find out all of our stuff. We're doing some exciting new things coming up soon. So keep your eyes peeled for that. And if you can't take that, take it easy.